Is the local top in for Bitcoin and altcoins? That's a question I'm starting to see crop up on my timeline as people start to panic a little bit after this recent dip. So in today's video, I want to take a data-driven approach to working out where we currently sit in the market. I've analyzed a variety of key indicators across both the Bitcoin and the altcoin market to work out where we currently sit. And based on that, I'm going to give you my opinion in today's video about what you can expect next over the next month going into the Bitcoin halving, and then after that, what my outlook is for the rest of Q2 and what I'm doing. So let's take a dive into the data in today's video to unpack the crypto market, and hopefully by the end you have an understanding of the different dynamics at play right now, which can help you make better decisions in the market. And just quickly before we get into the video here, if you enjoy this type of content where I give you market updates, altcoin picks, trading strategies, and more, make sure you click the subscribe button and turn on that notification bell for daily crypto alpha. Let's get on with the video. So looking at the Bitcoin chart here, we can see we put in a local top, we came back down, made a lower high, and are now ranging in the 65 to 66K region. So before we get into what I think comes next, let's firstly assert why we have had this pullback. What are the factors at play causing this correction? Well, the first factor, as you can see in front of you, is ETF demand has started to dry up a little bit, and we've actually seen some outflows, which you can mostly attribute to Grayscale starting to unwind some of their Bitcoin holdings. Grayscale being a future ETF, which is converting into a spot ETF. When you don't have enough demand for the spot ETF, and Grayscale is unwinding, that's when you do start to see these negative red days. So this is clearly a contributor behind the recent pullback in the market, and something that has caused just a little bit of concern across market participants. The other thing that has started to concern market participants is the Silk Road Bitcoin. This is a narrative that has been cropping up probably for the best part of the last 2 years, basically revolving around the Bitcoin that the US holds in federal custody that they seized from Silk Road. That's worth about $2 billion. We have started to see the government starting to move their Bitcoin position. As you can see in front of you, this Bitcoin moving around is indicating that maybe the US government is prepping to sell or in the process of unwinding some of their Bitcoin position, which they obviously hold in custody. I do just want to give a little bit of perspective here though. It's $2 billion in a market worth over $1 trillion, where some days we see tens of billions of dollars in trading volume. So although $2 billion coming onto the market would have an impact, I think people do tend to overestimate the impact. And in previous times, what we've seen is, panic of Mt. Gox, panic of Silk Road Bitcoin, panic of these forced selling events have actually tend to have marked local bottoms. Now, whether or not we think the panic is fully there yet, we will only be able to tell as the US government begins to move more Bitcoin, because this is just the beginning of it. But it certainly is this initial sell-off and worrying, which does tend to cause, a lot of panic in the market. I would say right now, though, by far the most important thing is looking at the spot ETF inflows, as that's really what you can attribute this really strong Bitcoin leg up to, which has obviously propelled positive sentiment. And now as these ETF flows start to soften a little bit, that's when you see your pullback in sentiment just starting to slightly shift in the market. And another observation I'd like to make that I find really interesting about the current market dynamics is that if you look at the top narrative performance based on, a variety of sectors across the crypto market, memes have been performing by far the strongest, up 547% year to date. The next best is RWA. And then after that, we see a massive drop off after AI, LSDs, etc. So it's really the meme coins that are carrying the market at the moment. And it's almost as if this typical alt season rotation has jumped a few steps. So usually what we see is Bitcoin pumping first, that then flows into Ethereum, that then flows into the large caps, and then you see those micro caps, meme coins, those, more speculative assets start to run. But what's really happened in the market is a lot of people, and this is an occurrence that's happened over the last couple of rotations, have just skipped straight from phase 1 and phase 2 straight to alt season. So we're kind of seeing this meme coin outperformance relative to the rest of the market. A lot of you that don't own meme coins will be looking at your portfolio saying, well, my portfolio is kind of performing relatively weakly. And how does that make sense when the crypto market cap is going up and total 3 looks super strong? Well, the reason is a lot of new meme coins are being created. The more coins you create, that liquidity just doesn't come out of thin air to capitalize those coins. It comes out of other sectors, other majors, as people rotate out of maybe bags that aren't performing so well into the meme coin casino. And it's kind of created this weird segmented money flow where, as I said, we've kind of almost skipped to phase 4. And that does indicate a little bit of froth in the market. There are multiple debates as to whether that signals whether retail's here or not. I'm going to get into the data later in the video. I have a really good piece of data which I want to show you that tells us how back retail is. But my personal observation is that it's not necessarily all new retail participants that are trading on chain and speculating on these on-chain meme coins. It's actually a lot of people that were involved in the last cycle that maybe had their interest cooled throughout 2022, 2023. They're experienced participants which are now coming back and playing in this meme coin casino. And a lot of you have probably started playing in the casino in recent times. And I don't blame you, because if you're not a chain maxi and if you're a profit maxi, you want to go where the money is, and that's where the money's been. So what do I think about this Bitcoin dip? What do I think about this altcoin dip? Let me give you my opinion. And then after that, let's get into the data, which looks at what's next. In relation to this current dip, I'm not worried. I'm not panicking at all. And in fact, I did a tweet a couple of weeks ago referencing the previous dip where I said, if the dip worries you, you're probably overexposed. In a bull market, dips should be treated as golden opportunities. Personally, I wouldn't mind going lower as a chance to top up on some quality positions. I'm sorry for wishing for this, guys, but that was my wish on March 17th, and now my wish is here. Why would I be panicking when I literally said I wanted lower a couple of weeks ago? Now, this mindset is hard to get into. I understand. When your bags are bleeding, it's easy to panic. It's easy to start to question the journey, start to question things. Is the top in? Is that it? Was that the top of the market? Are altcoins going to go down and bleed? Although it's very hard to forecast this stuff, although I'll do my best, later in today's video when we look at the data, the bottom line of everything is if you think we're in a bull run, then every major dip is an accumulation opportunity. How many times do we get these major pullbacks, especially pre-halving? This is something I've been warning about for the last few weeks. Guys, we get pre-halving dips. Sometimes they can be deep, 40%. 30%, 23% in the lead up to the big May top and then the secondary top in 2021 in November. We saw these major drawdowns in the market. It is normal. These are opportunities to accumulate the strong coins in the market. And that's always why I suggest during these periods, and actually it's more prudent to do this in the lead up to these periods, create and refine your altcoin accumulation list. Then you're not going into dips completely blind. And to give you a bit of reassurance, look at the previous cycle. We get these big drawdowns pre-halving and around the halving. It looks very similar to what we got in 2020, where we had this pump into the halving, then we had a drawdown slightly before we pumped on the halving and then drawed down again. And then we chopped sideways for a few months. Same thing's happening. We pump into the halving, we have a drawdown, we might get a halving pump, then maybe another drawdown, and then a sideways chop. Now, of course, it's not an exact science. Just because something happened in 2020 doesn't necessarily mean it will happen again. But this is relatively aligned with the narrative that I've been propelling and also my beliefs about maybe what we can expect next from the market. But there was an amazing report posted by Grayscale, which I want to dig into now, which looks at the structural catalysts which are affecting the market. And they make a big assertion based on key data as to where we currently sit in the market. So let's break down this report. We'll look at the key data points and then we'll summarize it at the end to give you a better feel for where we sit. Before we get into that, I want to remind you of an airdrop opportunity, which is for the BitGet wallet. So BitGet, who is a partner of the show, as you know, if you have been watching the channel, currently have an airdrop opportunity where basically you can earn an airdrop for their BWB token just for using their wallet. So if you are someone that does interact with DeFi, that does swaps, that even holds stuff in a wallet, it might be worth checking out the BitGet wallet because basically you earn points for swapping and maintaining your wallet balance. So the more swaps you do, the more points you earn, and the more wallet holding you have, the more points you earn. So you can earn 10 points for every $100 in swap volume. This is capped at 100 points. So essentially $1,000 in swap volume will max you out per day. And then in terms of wallet holdings, you earn 2 points for every $500 worth of wallet holdings, which is capped at 20 points daily. So pretty low limits for you to max out the points. You can do it on the app or on the website, and that will enable you to get your hands on a BitGet airdrop later in the month. So if you are interested, I'll leave a link in the description below. If you use that link, you can easily sign up for a BitGet wallet, do some swaps, hold some funds in there, especially if you're already interacting with DeFi. It's a way that you can maximize those interactions. So let's get into this Grayscale report now because there is a lot of alpha within it. And I want to break down some of the key points so you can have a better understanding of where we sit in the bull market. They cited a number of signals that currently suggest that we're actually in the middle of a bull market. So Grayscale isn't saying that we're super early here. They're not saying that we're super late either, but we're saying we're in the middle of a bull. And look, I would agree. I've talked about in previous videos that I think we're between phase 2 and maybe even phase 3 of a 5-phase cycle. Now, of course, in these phases, there are major drawdowns. We are seeing, I would say, like a small to medium-sized drawdown right now. It does have the potential to become a bigger drawdown, but generally, this is in the scope of a larger bull market, which isn't over yet, but one you're probably not early to in the scheme of this run. Now, do I think you're early to sectors like AI and crypto gaming? Absolutely. But does that mean you're early in the context of this cycle? I won't make that assertion just due to the fact that this cycle has now been going for over 100 days. If you do look at that initial total 3 breakout, it's actually been a couple hundred days. I like to take it from breakout. I don't always like to take it from the bottom where it's been over a year, just because we were still in a sideways accumulation chop during that phase. So Grayscale asserts the reasoning for being in a bull market to these 3 indicators: the Bitcoin price breaching its all-time high prior to the halving, which is something we haven't seen in many cycles before, the total crypto market cap reaching its previous high, and meme coins garnering TradFi attention and, of course, a lot of public attention as well. But in order to work out how long this rally could sustain, so when could we expect a bull market peak, you must assert the underlying price drivers behind that. And they point out 2 catalysts that are driving the market at the moment: spot Bitcoin ETF inflows and strong on-chain fundamentals, accepting that crypto is a reflexive asset class. So as price increases, on-chain fundamentals increase, which further drives value accrual back into the price of crypto tokens. Very interesting dynamic that not many other industries have, but let's break these down even further. The first one, spot Bitcoin ETF flows. I don't need to speak too much about this because I did earlier in the video. This has obviously been a massive positive, which has propelled Bitcoin price action. Notice how Bitcoin has dropped slightly since its peak as the ETF flows have started to tick into the negative region. So it's very interesting just how correlated these are. And this is why this is the #1 metric for you to currently watch. ETF flows are very correlated with Bitcoin price. Keep your eye on the ETF flow table. You can look up Farsight Investors Bitcoin ETF flow if you want access to that, because that's going to give you a bit of insight as to how the ETF flows are looking. Now, is it purely ETF flows driving the market? No, it's a combination of these factors that we're talking about now, but it certainly is a major contributing factor. The other major contributing factor is, of course, on-chain fundamentals, and you can segment this into 3 major on-chain metrics: stablecoin inflows, which clearly is increasing. The more stablecoins that come into the market, the more liquidity in the market, which allows more capital readily available for trading. That's super important, of course, for the market. So there's enough liquidity in the market, especially with all these new launches launching. There's probably too many new launches and not enough liquidity if you want to be, really critical of that. But certainly if you do look at the chart, it's in a better position than what it was in 2022 and of course 2023. The DeFi TVL is performing super strongly. There's been recent trends for this. A lot of, amazing perp dexes and IOU markets releasing, which are super usable and provide a value add to users, but also these new yield solutions like restaking, and that's only been possible because of the Shanghai upgrade. Athena is a recent yield protocol. We're probably going to have to go into that because there's a lot to talk about on that side in a future video. But DeFi TVL has also been a contributing factor, and also Bitcoin outflows. So outflows can indicate a few things: investor confidence, which is evident because confidence in Bitcoin is rising, and preference for holding over selling. Users are showing the propensity to hold their Bitcoin over selling, and that's why we're seeing less Bitcoin outflows in general. So it's for these reasons that Grayscale asserts that we're currently in the mid phase of the bull market, not the beginning, not the end, but the middle. But there's more data which kind of gives you a little bit more of a sneak peek as to where we currently sit. Let me move my screen along so it's easier for you to see. The first is net unrealized profit and loss. By the way, it's the most interesting part of the video, in my opinion, because it really gives you perspective for where we are in the cycle. The NUPL ratio increases when investors who bought Bitcoin at a lower cost basis hold despite rising prices. NUPL is now at 60%. The historical peak is at 70%. So this is, of course, the unrealized profit and loss of holders. It basically calculates their cost basis for where they bought and how much profit and loss they're in. As this goes higher, you typically do see people taking profits as now they're, substantially up on their initial investment relative to their cost basis. The second metric, which I want to highlight, is the market value realized value, or the MVRV Z-score, which is currently at 3, below the last cycle peak of 6 and 7 in the previous cycle, which was the historical high. What this indicates to me is that there is still room to run in this cycle. So what you can see in previous cycles is this score would have major peaks around the highs. We saw it in 2021, around 7. We saw it at 9 in 2017, 2013. We also saw it up there. This cycle, it hasn't quite reached those peaks yet. When you start to see this climbing really aggressively and spiking, that could be an indicator when we get these spikes that you might be seeing a bit of frothiness and a local top. This gives me hope that there still is room to run. Obviously, you don't want to use metrics in isolation, but you want to use a combination of metrics like I'm showing you in today's video to kind of give you a feel for where we currently sit in the market. I also like the CBBI index. This is something that Grayscale also points out in their report. You can see here that we aren't quite in this deep red/black territory where the confidence level is between 90 and 100. We're still in this 70 to 80% confidence level. We're currently actually sitting around 70. This is starting to get frothy. So 70 out of 90 is frothy compared to, what it was sitting at between 13, 20, 30. I think what gives me a bit of hope is that we've only just ticked into this orange period. If you look at other bull markets, once they tick into orange, they typically have a couple more months of super aggressive price action. Even whilst this is chopping sideways, Bitcoin can pump. So the confidence levels haven't been high for long, but they are getting high. So you can't really say we're early anymore, because if we're early, as you can see in the early stages of bull markets, confidence is between 20 and 30. Even in the early stage of this bull market, confidence was between 24. As you can see in March, and towards the end of the year, it started to tick up into the 50s. Then we broke out of that range. We went from yellow into orange, and now we're just ticking into orange. Usually when we've done this, we've had at least another 6 months of bullish price action with major drawdowns. You can see here, in September 2017, we saw a major drawdown. You can see here in January 2021, we saw a major drawdown. You can see again, we had a major drawdown before the second peak. So these drawdowns are necessary to flush out the weak hands in the market. These drawdowns are necessary to shake out excessive leverage. And I think this does a really good job at contextualizing sentiment in the market. And for that reason, I like it. And moving on from the point of sentiment, we can also see that crypto Google trends are still, although upticked, not quite at those, crazy highs that we got in 2021 and also 2020. This indicates to me that retail isn't fully back. And this is kind of leading on from the previous point I made earlier in the show about meme coins indicating retail interest. For me, it really indicates retail interest amongst market participants, but not new market participants. I am still of the belief not many new people are entering crypto right now. It still is a lot of the old people that maybe we captured with the last cycle's hype coming back and being interested again, but not a whole lot of new people. For new people to come back in, I think you need not just hype and speculation. Obviously, higher prices gets people in. Funnily enough, higher prices actually exaggerates the amount of retail that get interested in crypto. That's why I say crypto is a reflexive asset class. But I think beyond higher prices, we also need more applications that retail wants to use. This is why I'm so bullish on things like crypto gaming, things like AI, because I genuinely believe there's a use case there for people that aren't in crypto to use these products and onboard users into the market. But this does give me a little bit of hope. The fact that although we have upticked, we haven't reached that retail mania peak yet. So the TLDR of their report is ETFs have exposed crypto to a new class of investors. On-chain metrics have been super healthy. Retail isn't fully here yet, as I just showed you, but you have to be prepared for healthy drawdowns. Like, we're seeing a bit of a drawdown at the moment, and focus on the fundamentals when in doubt. And the fundamentals are showing us we're probably in the middle of a bull market. There probably is, and I say probably because you never know in crypto, but there probably is more upside to come, as long as you're willing to be prepared to hold and have conviction through these periods. So to answer kind of what the thumbnail's saying, I would say no, the overall cycle top is not in. I would say maybe we've hit a bit of a local top. We know that around these halving periods, as I showed you, we have these lulls, these drops, sideways accumulation, but typically that is succeeded by a larger rally at some point, and that's what I believe is going to occur. We don't know when. You just have to stick the course in the narratives you believe in, have conviction in altcoins, and follow through with your thesis and be smart about your positioning. Take some profits on green days, reinvest during massive red periods like I've spoken about on the show. Hope you enjoyed this video. Hope it gave you some context as to where I think we sit and as to what the institutions like Grayscale are thinking and what data they're looking at. And if you did and you're not already subscribed, make sure you hit that subscribe button to join the family. I'll see you in the next video. Have a lovely rest of your day. Peace out.